It's April 6th, 2026. I'm Sophia Tupolev, and this is your daily recap of what's going on in Israel's business community. This show is brought to you by Channel 10. A quick look at today's stories. In macro, March credit card spending reached 47.95 billion shekels, which is an increase despite Operation Roaring Lion. The labor market suffered a massive supply side shock with 142,000 new job seekers registering since the war began. In tech and defense, WeSure Global Tech secured 116.5 million shekels in a private placement. Arat Industries booked a 42 million shekel Ministry of Defense contract. Next Vision secured an additional $5.5 million order. And in capital markets, retail investors are defying institutional panic, pivoting from foreign stocks back to local indices. The mutual fund industry absorbed 4.5 billion shekels in March. Let's look a little bit deeper at consumer spending. The Israeli consumer continues to spend through the sirens even as the labor market fractures. According to new data from Shva, Automatic Bank Services, total credit card expenditures in March 2026 reached nearly 48 billion shekels, a 0.7% increase over the same period in 2025. While the daily average spend of 1.547 billion shekels represents a slight 3.6% dip from February 2026, it remains a staggering 11% higher than the daily average recorded during Operation Am Kilavi in June 2025. We are witnessing a brutal dual front squeeze on the Israeli middle class. While Shva frames the spending figures as a testament to Israeli resilience, the persistent 11% spike in daily spending is likely less a sign of consumer confidence and more a reflection of the inflationary toll of a monopolized market. The public is paying a geopolitical premium on basic goods simply because they have no cheaper alternatives during wartime. And in tech and defense, looking at some of Israel's public companies in the headlines today. WeSure Global Tech, which trades under the ticker WESR on the Tel Aviv Stock Exchange, announced a successful 116.5 million shekel private placement today, attracting top-tier institutional backing. The round included investments from Menorah Miftachim, Migdal, and the Shestowitz Group. The shares were allocated at 17 shekels, a discount to the previous closing price of 19.07 shekels. This follows a 150 million shekel raise in December 2025 and positions the company as a strong candidate for the Tel Aviv 125 index. Even in the shadow of Operation Roaring Lion, the private placement market for growth tech remains liquid for firms with a clear path to profitability. WeSure's 45% year-to-date rally demonstrates that investors are hungry for insurtech disruptors that can streamline legacy financial systems. By bringing in institutional heavyweights like Menorah and Migdal, WeSure is cementing its status as a national champion in the digital insurance space. However, for the broader tech ecosystem, the reality remains heavily bifurcated. For every mature tech firm that secures institutional funding, dozens of smaller startups are facing canceled rounds and operational paralysis due to the ongoing conflict's strain on human capital. And Arat Industries, ARYT, on the Tel Aviv Stock Exchange announced today that its subsidiary Reshef Technologies secured a 42 million shekel order from the Israeli Ministry of Defense to supply electronic fuses. Deliveries are scheduled between October of this year and February of 2027. This domestic procurement pushes Arat's backlog to a staggering 750 million shekels, which includes a conditional $52.5 million order from India's Bharat Electronics Limited, and sent the stock jumping 4.4% in early trading. Following a record 2025 with a 347 million shekel net profit, the CEO noted that the company is leveraging its operational stability to aggressively expand into European and NATO markets while developing next-generation fuses for UAVs and other munitions. Arat Industries highlights the other primary engine of the current defense supercycle, precision munitions. As Israel learns the hard lessons of localized supply chain dependency during a prolonged multi-front war, domestic procurement from firms like Arat is surging to replenish depleted stockpiles. Furthermore, with European and NATO defense budgets expanding in response to broader geopolitical instability, Arat's move into next-generation munitions perfectly positions the company to export its battle-tested components to Western militaries who are now scrambling to modernize their artillery systems. And Next Vision, NXSN, an Israeli developer and manufacturer of day and night stabilized camera systems for aerial and ground vehicles, reported a new $5.5 million order today. Under the terms of the agreement, 15% of the consideration was paid as an advance, with the remainder due before final delivery, slated for completion by the end of Q3 of this year. The latest contract pushes the company's total order intake for the first quarter of 2026 to over $120 million. This comes on the heels of a blockbuster 2025 that saw the company's net profit surge 56% to $103.6 million, supported by a massive $288 million backlog. Next Vision's financials read more like a high-margin enterprise SaaS company than a defense hardware manufacturer. A 62% net profit margin is virtually unheard of in traditional defense contracting, reflecting immense pricing power, a highly scalable proprietary technology, which is their, of course, patented stabilization engine, and an exceptionally tight supply-demand imbalance in the global tactical drone market. As kinetic conflicts increasingly rely on localized, high resolution aerial ISR, intelligence, surveillance, and reconnaissance, Next Vision is successfully converting a severe regional security crisis into record breaking, export driven cash flow. And a bit more on the capital markets. Despite the geopolitical volatility, retail investors are proving to be the market's ultimate shock absorbers. According to new data from Maytav Investment House, the Israeli mutual fund industry recorded 4.5 billion shekels in net inflows during March. However, the composition of these flows reveals a highly defensive localized posture. Shekel-denominated money market funds dominated, absorbing a massive 4.35 billion shekels, while dollar-denominated funds saw outflows of 450 million shekels. Traditional active management also saw a resurgence, raising 2.1 billion shekels, led by government and general bond funds. Conversely, passive funds bled 1.5 billion shekels, driven heavily by a 1.1 billion shekel exodus from foreign equity funds as global markets corrected. The S&P 500 and Nasdaq fell 5.1% and 4.8% respectively in March, compared to a mild 0.7 dip in the Tel Aviv 35 index. Despite net inflows, total industry AUM shrank from 791 billion shekels to 780 billion shekels due to 15.4 billion in market depreciation. This corroborates data from the FAIR platform, which noted a 51% surge in domestic equity trading volumes as retail players shift away from global exposure to capitalize on local valuations they perceive as a long-term recovery arbitrage. Retail investors are currently betting on the day after, while institutional players seem to be more inclined to hedge abroad. This pivot back to local assets suggests a high level of confidence in the underlying strength of the Israeli economy, but it also highlights a dangerous behavioral trap, potentially. The Israeli consumers' rigid loyalty to local recent market success, specifically the record-breaking dividends of domestic oligopolies and the defense supercycle, creates a bit of a macroeconomic blind spot, if you will. By aggressively buying into the top-line growth of local banks, insulated retail conglomerates, and aerospace firms, retail investors are exhibiting a powerful recency bias. That's our day. This show is available everywhere. Look for TV10 or below, wherever you're watching.